So you've got your first sale. Now, what do you do with that money? Today on the Landing Space podcast, we're talking about what you do with your cash after your first sale. So, Mark, when I started my business, I'm going to be completely honest. I had no idea what I was doing. I made the mistake, and we'll call it a mistake. At the time, I didn't know it was a mistake, but we're going to call it a mistake now, 10 years later. Yeah. I'm going to call it a mistake. My mistake was having an attorney set up my LLC. I went to an attorney and paid like $1,000 for him to set up my LLC. Now that I've set up multiple different LLCs, I've realized that it costs $125.
Yeah, it's super cheap.
Oh my gosh. And he did nothing different than I did, right? Yeah. He did nothing different. All he did was fill out the paperwork, mail it to the Secretary of State, which, by the way, took way longer than anything I've ever done.
Yeah.
And then I got approved for the LLC. There was no additional paperwork. Now, obviously, if you're filing as a corporation, other than an LLC, you have multiple partners. There's obviously some legality stuff there that needs to be taken care of. Yeah. Contracts, agreements on how assets are split, if you're putting money in and all that. But for me, for just a simple LLC for a real estate firm as a single sole proprietor, it was stupid on my part to do that because I wasted so much money.
I did the same thing. And there's actually other online lawyers out there like Legal Shield.
LegalZoom has options. Yeah.
Rocket Lawyer also has a platform where you can have them set up your LLC, and it only costs $200.
Yeah.
And that includes all your paperwork.
Yeah, that's smart. So, knew absolutely nothing about what I was doing, obviously. Then I had to figure out how to establish a bank account, right? After my first sale, I needed to take this check that was made out to 19 East Realty, that I need to go deposit that into a bank account.
Yeah.
I didn't know what I was doing, right? Young, dumb, had to figure it out. So talked to some people, talked to the attorney, which was the benefit here, realized I need an EIN number. Got on, and when you jump on Google and you type in EIN number, which is basically your social security number for your LLC, business social security number. But when you type in EIN number, how to get an EIN number, the first thing that pops up is a bunch of ads. And so avoid all the ads, right?
Yeah.
Avoid. Because the ads are going to take you to a site that you're going to pay more money to get your EIN number. It's free. Go to the IRS page, type in EIN, put in your information, get your EIN number. You need an EIN number in order to open a bank account.
Right.
So you're going to need an LLC or whatever your corporation is, and then you're going to need an EIN number. Once you have that, now you got your bank account. Now we can start putting money in there.
Yeah.
So, suggestions on what you do after I've got my first paycheck. What is something that you say that young entrepreneurs need to do as soon as they have their first paycheck?
When you have your first paycheck, the first thing you got to do is basically look up your overhead. See what your overhead cost is. Make sure you always keep up with it. If you've hired employees from the get-go, see what you pay them. Always make a monthly budget. That's how I started. But there's other ways to build capital now. So it was very difficult to try to build capital from the beginning because I didn't have loans or anything like that. My first paycheck, I worked pretty much everything on my own, but I had to still I had to set aside money for, you have to file for your taxes every year. You have to file for basically, redo what do you call the report, the annual report?
Yeah, your annual report, $200 a year, which is actually more than the LLC originally.
Yeah. So
in the state of North Carolina.
Yeah, it costs more to maintain your LLC.
Yeah, $200, $125 to set it up, $200 to maintain it every year. I think that one of the things you need to do when you start a business is you need to have your reserves. So you need to figure out your expenses. So you take all your expenses, tally it all up. We'll say it's $1,000 a month on expenses.
Right.
You need to make sure that you have that amount of money set aside. So let's say you sold a house, you got yourself $6,000. I would suggest saving 30% for the IRS, just putting it in the thing. If you don't use it and it's not that much at the end of the year and your expenses, which majority of the time your expenses will actually reduce that. But you've got that money and you can take yourself on a nice cruise or save it for next year, whatever you want to do with it.
Yeah, you can do a yearly distribution on it.
Yep.
To yourself.
So save that and then make sure you've got enough money to cover your expenses on a monthly basis. That way, when, you know, it gets slower or something happens or you don't have a sale that month or something takes place that you've got to pay for that's out of pocket, you've got that money set aside and you're not stressing about it.
Right.
And I think that's key. So having 3 to 6 months of reserve is always, I think, out of the get-go. And really, honestly, if you're thinking about transitioning from a full-time job into an entrepreneur role, having that built up before you do that will make your life easier in the go from the beginning.
Yeah, and one of the things that I realized later on when I had a business was to try to build business credit. I struggled and tried to build business credit because you can set up a capital account for your business. It's always better to try to spend other people's money. Right. So I don't recommend that for your personal assets or use, but for a business, I actually like to get lines of credit. Because you can reuse that money over and over again.
Yeah, I've got that set up with the credit card. That was one of the first things I did, is get a business credit card, which is easy.
Yeah. And it's going to be hard to do it when you set up your business first, because they always look at like at least 2 years of a business establishment, right?
Right.
So you might have to co-sign for it for your personal credit. But one of the first things I think anybody should do now, when you set up a business, once you set up your EIN, you get your first paycheck, apply for a Dun & Bradstreet DUNS number, because that DUNS number, when you apply for, say you need equipment for whatever business you need, or whatever equipment you need for your business, you need to try to get a loan for it. Well, you don't have any business credit. They're going to go base it off your personal credit, and if your personal credit gets used too much, then you can't get anything on your personal side because you have all this stuff for your business under your personal.
Right.
If you get a Dun & Bradstreet number, it's basically another social security number for you that a lot of companies and a lot of banks look at to see how your business credit is. That's how you build your business credit, is when you have your business and you have a building and you have a cell phone or you have utilities, always register what you're paying for, whether it be your light bill, whether it be, your rent. Always register that with Dun & Bradstreet to let them know, hey, I am paying for these. Let these build up my business credit. You have to actually manually register it with them. When you register at least 5 or 6 with them, your credit starts going up. By the time 2 years come, you're going to have perfect credit.
Right.
You're going to have perfect credit. And you can go to a bank and probably get like $500 million loan just with 2 years worth of establishment for your business, because you have that Dun & Bradstreet. You have your DUNS number. Your DUNS number is one of the biggest ways and the easiest ways to try to build your credit. Any business credit card, even though it's you've guaranteed for it for under your personal, register it with your DUNS number, because every time you pay for it, build your credit up for the business. So, and that could be for any business. I mean, I think that once you try to build up capital, I don't like to try to use my capital. I try to use it to pay off loans. I don't like to build up too much interest. If you have a good business credit, some of the interest rates you have is like 2-3%.
Yeah, make sure you're paying that off. If you can, make sure you're paying that off too on a monthly basis.
Yeah, I always pay it off. Yeah, I always pay it off lump sum, and it's every month I pay off the amounts. Like, for example, if I have a credit card that's on there, pay off your credit card, because it's money that you would have had to pay anyway if you didn't have a credit card. So just if you spend $1,000 on it, you've made $1,000 that month, and pay it off. That'll help build it up even quicker.
Yeah, that'll build it up quicker. Now that we've got the DUNS number, you've got your EIN, we're good there. We've got our bank account. Now, what I think you need to do from there is you need to link everything over to QuickBooks. You need to be tracking your expenses and making sure that everything that's coming in and going out is being recorded and taking place. So at the end of the year, your accountant is not struggling with having to figure out what's going on and all that. And it's really very simple with QuickBooks. As long as you go to a major bank, there will be a way to link your QuickBooks with that, and it will pull all that information out of your bank account every single month, and you'll just go through and click on it and approve it. Square actually has their own QuickBook and their own integration with it. So you can actually go straight through Square and be able to do it from there also if you'd like.
Yeah, and that's another thing, having a good accountant. Always communicate with your accountant. Never try to, if you have something you got to spend money on, try to get it approved. If you need it for personal use, make sure you don't try to commingle your money with your personal and your business. Make sure there's a valid reason that you can use your business money for personal. You can either apply it as a write-off, and you do something business related with it, or you can just basically use it as your income from the business. But get everything clear with an accountant. That'll save you. You don't get in trouble with the IRS. A good accountant is really important for you to try to manage your capital and what your investments and your expenditures are. Yeah,
the LLC is awesome because it will protect you as a lot. It'll protect your assets, personal assets versus business assets. What happens is, and this is what young entrepreneurs do a lot of times, is they commingle their money, where they have one account, all the money goes in, you pay all your expenses, your personal expenses and your business expenses out of the account. And then if something happens that you get sued for or you get in trouble for, the problem is that those money altogether is now one lump sum. So if you own a house or have a car paid off or any sort of assets outside of that business, those assets are now considered business assets.
Yeah.
And so during a lawsuit, if you were to go down that path, you could possibly lose that stuff because of your commingling. So the key here is to have two separate accounts, one for your business, one for your personal assets, and you're paying yourself out of that business into your personal assets, and you can say this is it. And it can be so easy as, like, for a real estate agent, it can be a percentage of a sale.
Yeah.
It can be a monthly amount, however you want to set that up, but you set it up, you tell your accountant what it is, and that's done on a monthly basis for that.
Right.
And that will protect you from your personal stuff. And then, like Mark said, if for some reason you have a shortfall or something happens that car breaks, you got to go buy a car, you can give yourself a payment at the end of the year or every 3 months, however you want to set that up. But just talking to your accountant about it and making sure you're running that through him and he's doing that properly will protect you later on down the road.
Right. And it's just the thing to get out of that whole topic is just communicate with your accountant. Make sure that you run everything to your accountant. I try to have a meeting with my accountant, every month to just kind of break down and balance your books. That's another thing. You want to balance your books. For me, I balance every 2 weeks. I go through my bank statements and see what I spent. And when I balance it, the one thing that I did not do when I first started was I did not do very good bookkeeping.
Yeah, I didn't either. That's always been my struggle with it because it's one of those last things you want to do because it's just, who wants to look at the amount of money that's coming in and out and what you're doing? You like seeing the amount that's in the bank account. You don't really want to know what you're spending it on.
Yeah, but it's great for write-off purposes. If you do very good bookkeeping, you don't have to go through your receipts and at the end of the year and try to scrounge up what you spent. But bookkeeping also, if you establish your business, say your business has been going on for 10 years and you want to move on to another business, you want to try to sell that business, your books are going to be the ones to help you be able to sell it.
Yeah.
Because you want to be able to show profit and loss with whoever you're trying to sell it to. So starting off early before you get too busy with your business, which the busier you are, the better it is for the business, but it can get overwhelming when you're super busy and you're just starting to do your bookkeeping.
Right.
So start when you're not as busy and just try to keep up with it. You can hire people. There's certain freelance bookkeepers. You go to Fiverr sometimes, there's bookkeepers there.
Upwork will help you. They've got plenty of accountants on there that'll jump on there and give you advice or take over your books for you.
Exactly. And there's other platforms. As a business owner, there's a lot of business owners out there that use platforms like QuickBooks for their payroll, for all their e-commerce stuff. And then you can also, they even offer accountant on there now, and you can get a bookkeeper on there, and it's all for one fee. And granted, if you can't find people that's reliable, try to utilize something that you're already using. If you're using some kind of platform to accept payments, usually that company has a bookkeeping platform.
Yeah.
Yeah, and it's going to be linked all together. You probably don't have to do anything about it. You just have to kind of communicate and look through it. They'll do all that stuff for you. So utilize what's out there. There's a lot. Just do your research. Having capital for the company is very beneficial for you, but also utilize, credit lines of credit out there. I think just building that up would help you grow your business. But that's it for our episode. Follow us on YouTube, and don't forget to download Landing Space Podcast and all the podcast